Thank you, Tony, for the shirt. Welcome to Portfolio Update number 7. Today, September 26, 2020. I'm just trying to finish recording this real fast, please. Thank you. Love you guys. Hello everyone, John here with Dad's Options. We had a great week in the market and our portfolio reflects that. If you're returning to the channel, welcome back. Thanks for tuning in again. I appreciate all your guys' support. If you're new to the channel, here's what we got going on here. I have a separate $25,000 portfolio that I'm tracking every move and I'm bringing you guys along for the ride. I'm trying to show that a mechanical trading approach really works and you can be very profitable. Now, I'm not talking about home runs or 1,000% gains overnight. These are small incremental gains and hopefully they add up to enough that you can outperform the market pretty steadily. That's the theory. Hopefully this channel and my portfolio is the proof. If you want to see more of these portfolio updates, go ahead and subscribe to the channel and hit the little bell to get notified when I post new updates. I try to post at least one update every week, if not more. If you want to get notified every time I make a trade in this portfolio, go to dadsoptions.com and click on trade alerts. There you can sign up and you'll get notified every time a trade goes through, and I try to post that within a few minutes, so it's basically real time. If you're looking for just trade ideas, trade alerts are a great way to see what I'm doing and maybe tailor them to your own personal portfolios and your own style. All right, without further delay, let's jump into the portfolio update. We have $6,031 of capital deployed. That's about 24% of the overall portfolio value. Again, a little low. Been really trying to get more capital deployed, but you know, it's better to not force a trade if the setup isn't there. So I want to run through a little thing that I do as well when I'm checking my buying power effect. It's a best practice or something that you know, you should take a look at, just because your buying power effect will change through the life cycle of the expiration. So I just go through here and I just look, you know, to make sure that all those, you know, to make sure that your buying power effect is still within your 1 to 2% of your overall portfolio, and make sure, you know, something didn't get skewed, you know, and creating more risk than you expect. So everything looks in line, you know, 570. We'll talk about Zoom here in a second. I broke the rules a little bit with Zoom, but yeah, so everything looks pretty in line. Nothing's, you know, $1,000, you know, or 4% of the overall portfolio value. So yeah, we're looking pretty good here. Again, that's, you know, we only have 24% of our buying power deployed. Next, you know, this coming week, we should be able to get some more trades on. It is earnings cycle, so it's going to be, you know, a little bit of slim pickings, but maybe we'll keep some of that buying power dry for, you know, to put on a couple earnings trades. And again, if you want to follow along with every trade that I make, I've started a little alert, Dad's Options alerts. You can click on dadsoptions.com and there's a little tab at the top for trade alerts. Feel free to sign up for those. You'll get, you know, every trade that I put on within a few minutes. And, you know, especially with earnings coming up, if you want to play along, and, you know, that's a great way to kind of stay in the loop on what we're doing. Those alerts are only for this portfolio, so just keep that in mind. We have $19,256 of buying power. Again, the lowest we would want to get that down to is, or at least the lowest I feel comfortable. Everybody has their different thresholds, but I like to keep that above 50%, so we could bring that all the way down to 12,500. You know, another $7,000 of positions. So, you know, and if everyone's, let's say everyone's 2%, that's about $500 of the portfolio right now. You know, that's 14 more trades. So, yeah, so we can, you know, we can put on quite a few more trades. Our delta is -2. I put on an SPX short call spread on Friday, so that helped bring the beta weighted delta down a little bit. So I'm good. For all intents and purposes, that's perfectly neutral there. And so we'll see what the market has in store for us tomorrow, or I guess tomorrow's Sunday, but what the market has in store for us next week. So theta is 23. Again, that's low, but we don't have that much capital deployed. When you have a good balance of defined risk and undefined risk, your theta number is not going to be super big. And just remember, again, theta is a good indicator of how much risk you have on. So pretty comfortable with 23. I'd like to see that number up, but again, if the number was 23 and I had 50% of my capital deployed, then I would say that we're probably too heavily weighted in defined risk trades. But we plenty of capital on the sidelines, so we'll see that number come up as we get more positions on, and we get closer to expiration as well. So and then we have an extrinsic value of 1744. So again, that fluctuates, and we'll like to see that come up with more trades. All right, so we have 24 positions on currently. Jumping into the activity tab, kind of see what we did. We'll start here. I like to start at the bottom. XOP, I was filled on XOP. Again, the energy sector has been kind of beaten up a little bit, so went ahead and sold one put there at their 37 strike. I did that. I did that on 9/21, which was Monday. Again, I think at the time it had 59 days to expiration. So just a short put. Again, try to diversify my strategies. I could have sold a strangle with the same amount of buying power reduction. I chose not to. Again, I like to diversify my strategies, and then that way, if we do have a big run up in the market or a big sell off in the market, some of my positions will still help. In the directional. Still help directionally. The next position is Square. This is an adjustment position. Square has been getting a little bit beaten up, so I went ahead and rolled my 195-200 calls. Those were the calls on an iron condor. Went ahead and rolled down to 155, 160 calls. Collected more credit. Helped offset some of that risk. And I believe Square is right at 157. So so we're going to be tested on the call side, but hey, that happens. So again, I like to take a little bit of the delta exposure off. That's a little technique you can use if you're trying to pick up some short deltas. Because the market's selling off, go ahead and roll down some calls, roll down some call spreads, roll down your call spread of your iron condor. Some of those things will help you pick up some short delta. So I went ahead and did that. So now we're a little bearish again in Square, but again, that was back on Monday. So a lot's happened since Monday. Apple is a new trade. Got back into Apple with a call spread. This one's on my trade blog at dadsoptions.com. I went ahead and got back into Apple. The premium's still pretty good. I sold just a very standard $3 wide call spread, collected $1 for that. One thing I really liked about this trade was I was able to get into the weekly cycles. When I put this on Monday, there was 39 days to expiration. So that was a good trade. Not all, I would say actually the majority of underlines don't have liquid enough weeklies. So Apple is one of them that actually do. You can get in and out of the weeklies at mid price. So I don't mind trading the weeklies in Apple. Some very liquid options there. So that was good. 39 days is the closest to 45 days that I could find out there. So love having short call spread on in Apple, and we'll see what happens with that one. Another trade I did on GLD, that was a new trade. Did that one on Monday as well. $3 wide put spread. still bullish on the metals. So $3 wide put spread, collected $1.01, so 1/3 the width of the strikes. Very textbook, mechanical. Just putting them on, and yeah, see what happens with that one. Going into Zoom. Okay, so Zoom, I broke the rules a little bit here. Zoom has terrible markets. Is where I broke the rule, number one. Number two is, you see it's a $10 wide call spread that I sold. I only collected 384, so that means I was really far up. I'm at 616 bucks, I guess, of buying power reduction when I first put this on. So that pushed me just a little bit over the 2% rule. Again, I'm half joking. It's you want to stay just around that 2% or less, in my opinion. So I was looking for something to do. This was on Tuesday. I believe the market was selling off on Tuesday, and I was looking to pick up some short deltas. Zoom was one of those freak stocks that was rallying like it has done pretty much every day on that day. So I really needed to pick up some of those short deltas. I decided that Zoom was a good candidate, even though I was pushing the boundaries a little bit, and it was at all-time highs. So when something's at an extreme, I don't mind taking a little shot in there. Again, the risk for this trade is $616. Zoom's been all over the place even since Tuesday. So I think currently, yeah, this Zoom's last price was $496. So currently this is going to be a winner, but who knows? There's so much. There's a good amount of volatility in Zoom, and it's kind of like Tesla, right? Where's it going to be at in 55 days? Nobody knows. So I thought 500 was a good round number, and maybe that would be some sort of resistance, or a technical analysis trader. So but anyways, yeah, that's Zoom. Broke the rules a little bit. Illiquid options, not the best markets in there, and I pushed the boundaries on the 2% rule. But we'll see what that happens. It's it's still a defined risk trade, so I'm not really putting my portfolio at risk in that position. So all right, moving on. Got filled in Oxy for 42 cents. That's a winning trade. Took that one off. I had 2 contracts on there, so I think overall that was like about an $85 winner. So that was a good trade. GME is a new trade. This was on Tuesday. I just went ahead and sold a call in there. GME, I actually sorted the watch list by 52-week highs. GME was at their the 52-week high. Yeah, this was back on. So yeah, see here, the 22nd. GME was at its all-time high. I went ahead and sold the call, and that looked like it worked out pretty good so far. The volatility has not come in yet, but yeah. So I just have a naked short 15 call in GME. SLV, I went back into SLV. I sold a 20.5 put. This time, if you saw the previous portfolio updates, I had a SLV short put spread. The only reason why I did a short put spread was because the buying power requirements were crazy in silver. So maybe since silver came down a little bit, I guess yeah, volatility seems to be still a little bit high. So really not sure why the buying power requirements are much different in there, but let's see what the capital is required for SLV. It's only $346 now. So when the previous cycle, when I tried to put on that same short naked put, the buying power requirements were up in like $800 or something like that. So I'm okay with $300 fits my risk parameters. Workhorse, this was a good trade. It was the premium in there was really rich. Went ahead and took that off. Was able to take that off for a 50% winner, $127 winner. And this was back on Wednesday. So again, I had that big white strangle, 1440 strangle for $1.27. I believe Workhorse has earnings coming up. I was going to try to get back in there. Maybe it does not. Oh yeah, there it is. It just popped up. November 13th. So we'll see. We'll see where Workhorse is. And then I just realized the IV rank dropped way down low too. So wow, this IV's been all over the place. So probably going to take a little break from Workhorse for now. But yeah, that was a great trade. Dean from Twitter found that one, so good call, Dean. That was a nice trade. Uber closed. Uber was a long debit put spread, a 40-35 debit put spread. That was a good trade. I was able to take that off. That was 50% of the profit that I could make. So yeah, I paid $2.92 for this debit spread. So you know, took a little over $1 out of it. So that's a good trade. My max profit on it could, you know, would have only been $500 minus $292. So yeah, 50% of the max profit in Uber. So that was a good trade. Microsoft's one of the OG trades in the portfolio. You know, you see here, I only had 20 days left. I went ahead and rolled down the call spread. Again, you know, really trying to pick up some short deltas here. Rolled down the 255, 260 call spread to the 215, 220 call spread. This only has 20 days left. Defined risk spread or defined risk trade. So really, at this point, I'm trying to just take off some of the risk by collecting more credit and reducing my cost basis. So let's see. Microsoft was at 207.82. Yeah, so you know, much lower than I think it's below. Yep, well, it's right above my my put spread. So you know, we're actually out of the money on both of our spreads in this position. So hopefully Microsoft stays right there and we can take a couple dollars out of that trade. I'd probably shoot for like $2 out of that trade. Twitter is, now this one's kind of interesting. This was just a strangle. I went ahead and closed this trade. Twitter was a winner, a small winner. I didn't roll it, and here's why. Twitter has earnings October 22nd. You know, it got to the 21 days to expiration, which is typically where you want to roll, especially undefined risks. I didn't want to roll it through the earnings, especially since we were, you know, our call, our naked call at the 46 strike was being tested. Twitter sold off a little bit, but we had a small profit. The only other thing that I was willing to do with this trade was roll it out in time. But again, since the earnings cycle kind of interrupts between now and the next cycle, I was happy to take a little bit of profit, close the position, and then, you know, maybe after earnings or maybe for an earnings play, we'll go ahead and play Twitter, you know, later next month. So UNG was... Let's see. Oh, UNG is another adjustment trade. I went ahead and rolled UNG out into time. This was similar to Twitter. It's a strangle. It's a very tight strangle, so almost simulates a straddle though. But you know, I hadn't seen a profit yet in UNG, so I wanted to give that position a little bit more time to work. So I went ahead and rolled out to the next cycle. UNG does not have earnings. It's an ETF, so yeah, so I was able to go ahead and just roll that out, collected another $1.14. So, you know, on something like that, again, I'm trying to manage that more like a straddle, or like around 25% of max profit. Was not hit yet on that position, so give it a little bit more time. All I did here really was, you know, spread out my break-even points. You know, UNG does not move very much, so, you know, I've collected a couple dollars now for UNG. So really, you know, I have a big cushion here, and you know, this is a good theta position. Just collect theta every day, and hopefully, you know, again, we'll manage it closer to 25%, maybe somewhere in the middle of 25 and 50. So call it 30%, 35%. We'll look to take that one off. SPX, this was a trade I just did on Friday. This was, again, my deltas were getting, were a little positive, and just going into the weekend, I wasn't opposed to having, getting into the negative with my deltas. So this is basically risk one to make one, 50% shot. I think it's a little bit better than 50% shot because I was able to do this pretty far out of the money. Let's see, it's SPX last print was 32.98, so we're all the way up at 33.50, so 50 points away to the upside, and was able to sell that call spread, for a $5 credit. So that was a pretty good trade. Only have another $500 of risk on that on the trade. So look to take half, 50% out of that, which would be $250 winner, which would be good. So just look for a little bit of sell-off, and then maybe a day of a good volatility contraction, and we should be there. So that's all the positions. So just kind of taking a look at our portfolio. CRBP still the problem child. Again, I try to go in here and just take a look to see, again, if I could maybe roll this out in time. And I don't even think that's a possibility. We have our interruption of our earnings here, and who knows what's going to happen. This thing could be 5 cents by, after they release their earnings. So, and you could see the 5 here, 340, 370 in the next cycle. I mean, look what it's printing here, 340, 350. So you're basically not even going to get paid to roll that thing out in time. Kind of a sitting duck here, dead in the water. If it does nothing else but do nothing for the next 20 days, we're out $345 minus the credit received, which was about $150. So so nothing really we can do here. There's only $1.50 of extrinsic value left. So the IV ranks here, but there's no volatility. There's no premium in this position. So we'll just drag that position along as we go. Everything else is looking pretty good. We have quite a few free butterflies on now. So as we get closer to these October positions coming off, we will, it might start getting a little bit of exciting. Some of these could pin in the middle. I mean, Tesla's not going to, but, and we don't even actually have a free butterfly on here. We still haven't been able to roll up this 415 put. So that thing has been all over the place. And we'll have some fireworks here down the stretch. So Zoom, we talked about, again, the goal with the portfolio is just to put on as many trades as possible. Love having at least one position in Apple in my portfolio. Again, a call spread. This thing's going to go in the money here shortly, probably, if we keep getting a bit of a rally here. So, but if you follow along with all the portfolio updates, we're used to that by now. So not a problem. And QQQ, we have a free butterfly on in there. So, if we do keep rallying and, Apple goes in the money on this position is probably going to get pretty close to being a full free butterfly winner there. So that's it for today. Our overall portfolio value is $25,281. We're finally back into the green. We're up $281 overall since our portfolio inception, and we're up $514 since last week's portfolio update. Last week we didn't have such a good update, and it just goes to show that if you just stay small and stay mechanical, you can make money. Hopefully we'll just keep compounding that and grow. Not saying that there's not going to be any more down days like there was last week, but it just goes to show staying mechanical, you can hopefully build on those profits and increase your overall portfolio value. All right, so that takes care of the portfolio update for this week. Again, if you want to see more of these portfolio updates, please subscribe to the channel and smash the like button. I appreciate all you guys. Have a good rest of your weekend. Watch a little bit of football, and we'll see you next week. Thanks. Happy trading.